Right now, the entire crypto market is reacting to what just happened with Bitcoin. The price is currently sitting around $70,000, and in the last 24 hours, Bitcoin has dumped nearly 5%, shaking confidence across the market and leaving many traders asking the same question: why did this happen, and what comes next? Because let's be honest, when Bitcoin moves, the entire crypto market follows. Altcoins fall harder, sentiment shifts instantly, and fear spreads quickly. And that's exactly what we're seeing right now. But here's the thing most beginners don't understand. A 5% drop in Bitcoin is not unusual. In fact, it's part of how the market works. If you look at Bitcoin's history, even during strong bull runs, corrections like this happen all the time. The difference is, smart investors don't panic during these moments. They try to understand what's actually going on behind the scenes. So let's break it down. One of the biggest reasons behind today's crash is simple: profit-taking. Bitcoin recently pushed towards strong resistance levels near the $70,000 zone. Whenever price reaches a major psychological level like this, early investors and short-term traders start booking profits. And when large amounts of selling hit the market at once, price drops quickly. Now imagine thousands of traders doing the same thing at the same time. That's how these sudden dumps begin. But that's not the only reason. Another major factor is liquidations. Crypto markets. Many traders use leverage, meaning they borrow money to increase their position size. While this can amplify profits, it also increases risk. When price moves against leveraged traders, their positions get automatically liquidated. And here's where things get interesting. One liquidation leads to another. When price starts dropping, leveraged long positions begin closing automatically. This creates more selling pressure, which pushes the price even lower, triggering even more liquidations. This chain reaction is often called a liquidation cascade, and it can turn a small dip into a sharp crash very quickly. Another reason behind the drop could be macro market pressure. Global financial markets play a bigger role in crypto than many people realize. If there are concerns around inflation, interest rates, or economic uncertainty, investors sometimes reduce exposure to risk assets like Bitcoin. Even institutional investors, who have entered the market in recent years, react to these macro conditions. And when institutions adjust their positions, the impact on price can be significant. There's also the factor of whale movement. Large Bitcoin holders, often called whales, can influence the market with just a few transactions. If whales start selling near resistance levels, it sends a signal to the market, and smaller investors often follow. Now here's the important part. Does this 5% dump mean the bull run is over? Not necessarily. In fact, corrections like this are often healthy. They reset the market, remove excessive leverage, and create stronger foundations for the next move upward. Without corrections, markets become overheated and unstable. Now let's zoom out and look at the bigger picture, the road to 2026. Because this is where things get really interesting. Bitcoin operates in cycles, and these cycles are heavily influenced by one major event, the halving. Every few years, Bitcoin's mining rewards are cut in half, reducing the supply of new coins entering the market. Historically, this supply shock has led to major bull runs in the following years. If history repeats itself, the period between 2025 and 2026 could be one of the most important phases for Bitcoin's price. In a moderate growth scenario, where adoption continues steadily and institutional investment keeps increasing, Bitcoin could realistically reach the $100,000 to $150,000 range by 2026. This would be driven by factors like growing global adoption, increased use as a store of value, and continued demand from institutional investors. In a strong bull market scenario, where global liquidity increases and crypto adoption accelerates, Bitcoin could push even higher. Some analysts believe that BTC could reach $180,000 to $250,000 during peak market conditions. And then there's the extreme bullish case. If Bitcoin continues evolving as digital gold, if major financial institutions allocate larger portions of their portfolios to BTC, and if global economic uncertainty drives demand for decentralized assets, the price could potentially move toward $300,000 or beyond by the end of the decade. Now, does that mean Bitcoin will go straight up from here? Absolutely not. The path to those levels will include multiple corrections, dips, and periods of fear, just like the one we're seeing today. That's how markets work. They move up, they correct, they consolidate, and then they move again. What separates successful investors from everyone else is how they react during these moments. Do they panic and sell? Or do they understand the bigger picture? Right now, Bitcoin at $70,000 after a 5% drop is not a sign of weakness. It's a reminder that even the strongest assets need to breathe. And sometimes, these dips are exactly what the market needs before the next big move begins. So as we move closer to 2026, the real question is not whether Bitcoin will experience volatility. Because it will. The real question is whether you'll be ready when the next major move finally begins.